Hello everyone. Today we are presenting our topic investment options, equity, debit and mutual funds. In this session, we will explain three investment options in a very simple and clear way so that anyone can understand how they work and which type of investor they are suitable for. Before we discuss the actual products, it's important to understand the three categories of investments. Equity simply means owning a part of company. If the company grows, your money grows. Debit means you are lending money to a company or government and earning fixed interest. Mutual funds pool of money from many people and invest in different stocks or bonds which reduce risk. These three categories are the base of almost every investment. Our first option is ICICI Bank Equity. We choose this because ICICI Bank is one of the India's leading private banks with a strong brand and consistent performance. Investing in this stock can be good long-term choice because the bank sector plays major role in India's growth. It offers medium risk but also good growth potentially. Another advantage is high liquidity. You can easily buy or sell the stock anytime during market hours. Strong and trusted brand. Established market lender with nationwide presence. And our second option is Tata Capital NCD, which fall under the debit category. These NCDs give fixed returns at regular intervals, which makes them very predictable. Because they are backed by the Tata Group and have strong credit ratings, the risk level is very low. The option is mostly chosen by people who prefer safety and stable income, especially by senior citizens or conservative investors. Our third option is the SPS Small Cap Mutual Fund. This fund invests in small companies that have high growth potential. It has been performing well for many years and is managed by experienced fund managers. However, because small cap companies are more volatile, this investment is suitable only for long term goals, ideally for 7 to 10 years. If someone wants long term wealth creation and can handle some ups and downs, so they can prefer the SBI Small Cap Mutual Fund. This fund is strong choice. Understanding investment characteristics. Now let's compare the three options: risk, returns, and liquidity. ICICI Bank has medium risk, Tata Capital and Cities have very low risk, and SBI Small Cap has high risk. Coming to returns, ICICI Bank can give medium to high returns, Tata Capital and Cities give fixed returns, and Small Cap can give high long term returns. Now coming to liquidity, ICICI Bank is highly liquidity, NCDs are very less liquidity, and mutual funds take 2 to 3 days to redeem. This comparison helps us to see the strengths and weaknesses of each option. Tax treatment and time horizons. Taxation is simple. None of these options give special tax benefits. Equity and mutual funds have long-term capital gains tax, while NCDs interest is taxed as normal income. Time horizon is important because NCDs are good for the short to medium term. ICICI Bank is suitable for 3 to 5 years, and SBI Small Cap is best for long term holding. Choosing the right time horizon helps reduce risk and improve returns. Matching investments to investor profiles. Different investors have different needs. Aggressive millennials who want growth can also choose ICICI Bank. Senior citizens who prefer safety and steady income are better suited for Tata NCDs. Middle-aged investors who want long-term wealth creation can pick SBI Small Cap. So the best investment always depends on age, goals and risk tolerance. Final investment recommendations. To conclude, each option has its own purpose. Equity helps in long term growth, debit gives safety and fixed income, and mutual funds help in creating long term wealth and diversification. There is no one best investment. The best one depends on investor risk level, financial goals, and how long they can stay invested. Thank you for listening to our presentation.